Right.
All right. Hey, this is Kenn Renner, real estate broker, the investor savvy agent with another investor savvy agent. We're talking to Jason Bleier. He works in the Danville area, which is in East Bay in the San Francisco Bay Area. We've met recently at a summit conference for the Tom Ferry organization, the largest real estate coaching organization in the world, really. As like-minded people, we were looking for opportunities to help our clients and even help ourselves in building portfolios of property, and offering opportunities that are a little bit outside the box. And so everybody that I've worked with, the agents that have been in the business for a while, they have a sphere of influence. They have clients, and a lot of them maybe flush from the stock market, or if they inherited a property, or they had had a rental, and they're just starting to think about, well, maybe we should consider putting that property or putting that stock portfolio to work in real estate and hard assets. So Jason and I have an appointment here in a few minutes to talk to some of his clients that were considering different areas, Phoenix and Vegas and all that kind of stuff. And I'm going to offer them more of an opportunity to talk about a little bit more about the Central Texas region, and what's going on in our market. But I'd like to first have Jason introduce himself, talk about his area of expertise in the Danville area, and then talk a little bit about the numbers and like we were talking about before the podcast was the migration coming out and with like Chevron.
Right.
So that's huge news. So yeah, go ahead, Jason. Tell us a little bit about yourself and where you
I appreciate you, Ken.
where you've been and where you're going.
Yeah, I appreciate you. It's been a pleasure getting to know you a little bit better. And that Tom Ferry Summit was just fantastic. But having said that, I've been a licensed realtor full time since 2006. I'm a second generation realtor. I was groomed by my folks. My late father, right out of college, actually wrote my college paper thesis on how the internet was going to change the internet industry. We all have seen that happen before our eyes. But navigating the real estate industry since 2006, I've done everything from surviving the short sale and the REO, Great Recession, how to kind of really dive in deep to that to get through that particular market when I was young and in my 20s. And moving on from that, I've had tremendous amount of growth and experience within corporate relocations, as you briefly mentioned, and service everything from flippers to first-time buyers to the luxury market. And I've been doing this again full-time since 2006, and second-generation realtor, proud husband and dog dad to Clara and Sir Bleier.
Well, that's really exciting. We're also a real estate family, and we've owned real estate for a long time, and we're really surprised a lot of agents that we across the spectrum don't own investment properties. And it's kind of strange because there's so many benefits to owning properties, from tax advantages to building wealth to asset protection, portfolio protection. So really, what's the median price in the Danville area right now?
So in August, we closed out at the average sales price was $2,293,000.
Wow, 2.3.
And the number of properties sold was 59, and the average days on market was 25. And believe it or not, that was up from 17 and a half year to date. So we did see, if you want to call it, we did have a bit of a slowdown over the summer months, which of course is to be expected in July and August. But here we are after post Labor Day, and we're definitely starting to see a bit of a tick up in the number of transactions and properties moving into escrow.
Well, you said also that the prices were going at over full price, just over 100% of asking price.
Yes,
and
so we were at 100.7 last month.
And you seeing multiple offers in most properties?
We are. It is hit or miss. So we are seeing homes that are more turnkey. We're seeing those homes fetch a little bit more of a demand, if you will, and to get those multiple offers. And of course, transparent pricing, having prices that are really honed in, as opposed to some sellers that weren't quite on board maybe with having those prices that were at the beginning of the year, during those spring months.
Yeah.
And also holding on to some of those COVID numbers. So we've kind of, for the most part, gotten around that, but there are a few and far between that seem to be holding on to that. But that is definitely not the norm.
Well, just like all of the Bay Area is on a very short supply because they're mortgage locked at great rates. And we're seeing prices continue to rise. And that's It's a great thing when you're on that on the ownership end of that. And so what we've talked about earlier was before the podcast was the counter cycles of the market, and we're on counter cycle. The Texas region is on a counter cycle. California's been going back for 40 years, where when California is doing really well real estate wise, Texas is kind of in the doldrums. When Texas is doing really well, California is kind of in the doldrums. And what usually a 7 to 10 year real estate cycle, like for instance, during the dot-com bust, Austin was devastated. Everything just kind of we didn't lose value. We just lost market sales. The volume went down.
Sure.
But but then early 2000s, the Bay Area and everywhere just went through the roof until 2005, 2006. And so I would say that you made it through, you got in right at the very end of the last cycle that but you made it through that horrible 07, 08 time when everybody's in their houses and I call it the you survived and you have a little bit of PTSD, but you
we got a little calloused up after that experience, but hey, it was necessary. My attitude, Ken, with that whole dealing with that whole part of the market, being a 27-year-old, roughly freshly married, I just married Clara on 7/7/06.
Yeah.
I was like, you know what? I'm going to do what no one wants to do. And no one at that point really wanted to do short sales. They were tedious. They were a pain in what. Yeah. So I was just, what, the heck with it. I'm just going to dive all in. And that was the kind of niche that I made for myself at that time.
Well, a couple of things about that. First of all, you got to go where the fish are biting, right? If you're going to catch fish, you're going to go with their biting. And I was not set up to do the short sales the way that a lot of people dove into it, and it definitely cost me. But we did make it through, and because we owned a bunch of property, we were able to sell some to be able to survive it. No, Austin prices really didn't drop at all during the median price did not drop at 07, 08, 09. Saw drops of about 30 or 40% in the California market, and
we sure did.
Yeah. So that was the stability that Austin brought. And what happened though since 2020 is that we saw of course we know all what happened. Austin became the poster child of the pandemic boom in real estate. I always tell people in my presentations, even especially out there, I said, when people say anything about a market, whether it's a stock market or whether it's real estate market, they go, "This market's crazy." I say, "Time to get out." Time to be careful. If it's crazy like it was here, people bidding 10-20% over full cash just because they could, and that, of course, what happened with pandemic is in a 3-year period, we crunched a 10 years worth of appreciation and cycles into a 3-year, 4-year period. So we had 100% appreciation in the 3 or 4 period. And that was awesome for those that owned that. I was putting in properties before 2020, but it didn't. When it started to drop and stabilize now, it dropped maybe 15-17%. Okay,
sure.
But that wasn't that's not. If you go up 100% and you lose 17%, it's still a really good return. We stopped actually investing for the most part. Most of our supply of inventory was not in Austin because the prices were too high.
Is that right?
The rents were not keeping up with values. So same thing like you said in your market, that the what'd you say, the price is 2.2 million. You could rent that for how much? How much?
For 2.2 million, you're about 6,500 a month. So the numbers just don't get there.
Right. So if you were going to buy something like that and maybe turn into an investment, then it was basically going to be looking at $13,000 a month payment or a $6,000 rent. So it actually makes more economic sense to rent and take the difference and invest in more real estate or some other kind of investments.
Yeah, and that number may be a bit conservative, the 6,500, but it may peak up at 8,500. So still, that you're still negative, right? The delta is still there.
Well, you also kind of had an import of immigration coming from the Bay Area, from the San Francisco area, because you could only get 1,000 square foot home there for $2 million, and now you can get 2,500 square foot in your area, right?
Yeah, that's a great point, Ken. If I had to put my finger on one key attribute that were part of the COVID unicorn years here in the Bay, here in the East Bay specifically, was that we saw a major migration from the South Bay and the peninsula with the techies that really were looking at what they could get over there. You're looking at roughly 1,000, 1,200, 1,500 square feet. That's extremely dated, maybe a small lot,
Yeah.
maybe not the best schools, and they're looking at those numbers, say that's $2 million, 2.2, what have you, what they could get there, and then what they could get versus over here in the 680, 580, 24 corridor, which is for the same price point, you're looking at minimum 2,500 square feet, maybe on a quarter acre to a third of an acre, and with some of the best public schools in the state. So that was really the driving factor in terms of the craziness of the 20 to 30 offers we were receiving on homes, homes going 300, 400, 500. In some cases, we even saw $1 million over list. So it was intense.
That was crazy.
To get back to it, it was really the genesis of that grand appreciation that we saw so quickly during those COVID years.
Yeah, and so one of the things I always tell my clients, or when people ask me, especially in networking meetings, and say, who's your perfect client? Who's your avatar? And I say, it's somebody that's working for Chevron right now that is relocating. They need to sell their home and they need to relocate out to Texas. But they're going to sell that $2.5 million home that they only owe 700,000 on. They're going to they're going to take their 500,000 if they're married tax free. So you got your tax free, and then the rest of it they could put that down on a property, and then we could take the other whatever's left over they don't need for the next primary residence and buy multiple investment properties. So especially in the areas they're moving to, because we figured the prices here are about 1/4 of the prices, and that's in the more expensive Austin area. In other areas. So the market that we're selling right now, we're going to be talking to our clients in a few minutes here, is areas that are outside of Austin because the prices are too high to make the numbers work. We're all investors. We don't want to feed the property as far as paying every month. And that's the negative cash flow is not, we want break even or positive. And we're doing areas in San Antonio and Austin are only 50 miles apart. People don't realize that San Antonio is the 7th largest city in the nation, and Austin's now the 11th largest city. And they're only their borders are only 50 miles apart. So what's happening is the two cities are merging, similar to
they're going together, huh?
Yeah, kind of like Dallas Fort Worth. That's what it's going to end by 2015. It'll be a big Dallas it'll double in size. But we're buying houses in this area from a national builder for $200,000 to $240,000, brand new construction, ranging from 1,300 square foot to 1,600-1,800 square foot. That's our avatar spot for our models of homes. Brand new construction in master plan communities with big communities like 2,000 homes, and with lower tax rates as low as 1.4, which is low for here. But here's the kicker: the builder is offering what they call national forward commitment financing. They bought chunks of money that they can offer our investors 4 7/8%, 30-year fixed with no points.
That's huge.
So when you talked about, I have a client that did very similar to what you're talking about. He's in the San Mateo area, and he sold his 3-bedroom, 1-bath in San Mateo and bought 9 houses from me in a 1031 tax deferred exchange.
9, huh? Not too shabby.
So so he was getting about a little under $4,000 a month for that one little house in Guilford Lane in San Mateo. Now when he did the 1031 tax deferred with no taxable liability at the time, he was able to get 13,500 gross income. Now that after 5 years, that income's over 17,500.
Is that right?
So that's
a nice mailbox money, right?
Oh yeah, and most of them were, he sold one, he only owed $250 on it when he sold the house here. So most of them are free and clear. He's retired, long retired, and he's not even in real estate. He likes real estate. He's a printer. He's a retired print shop owner.
Is that right? Ken, let me ask you a question about that. What are you seeing in terms of down payments on those properties? What's the average?
25%. So
that's okay. So
it's about 50,000, 60,000 all in. Per property. We just talked about that. If you're buying a $2 million house in Danville, or you can buy 10 houses from us, and they're all renting for anywhere from $1,600 to $1,900 per month. Those numbers work really well. Positive cash flow with 25% down is from $250 to $350 a month, which is unheard of, because when the rates went way up, there was no cash flow. Now the builders solve that by offering these incredible financing terms. So we encourage people to think outside the box and think about real estate investing niches. We're very, I've been here for 30 years in the Central Texas region, but you and I are well connected through the Ferry organization with other markets that may also serve. If someone wants to go to Dallas or someone wants to go to Florida, I've got people right now in my Rolodex that's what they do. They're investor specialists, and they're
Is that
able
right?
to offer the properties that, North Carolina. One of our meetup people were from North Carolina. We've already spoken stuff like that. So we try to keep the areas where the prices are low, where he has room to appreciate, where you're not feeding it every month. Put your head on the pillow, fully managed turnkey operation for us. So hopefully
Love it.
that Chevron relocation that's going to happen, that you get in front of those folks and,
Right. Yeah.
we'll keep that awesome, opportunity for you to capitalize on that. And if anybody's interested, as you start having meaningful conversations with them, that I'd love to talk with them, or even fly out to your area, like I said, and sit in a conference room and talk about the possibilities.
I appreciate that, Ken. I think this is a great opportunity, and I think there's a lot of value to offer here with people that are in these equity markets like the Bay Area and throughout California and the East Coast and throughout the West Coast too, but also taking some of that equity and moving it into cash flow opportunities in your neighborhoods.
And making it work, right? Making it
Exactly,
work.
making it work, of course. Yeah.
Yeah. So yeah, I appreciate the opportunity to do this interview with you, and I hope you get it out to your group of people, so we can talk about you're the expert for the area. You've got Chevron moving out, so let's get in front of those.
Everyone's got their foot out the door, and by the next 3 to 5 years, they're expecting over 2,000 jobs to be really relocated officially over to Houston, and those are all VPs and C levels, so it should be good.
Oh, okay, great. Well, give us your contact information so people can get a hold of you.
Yeah, feel free to call me, text me at 925-997-7373. My Instagram handle is @jbleierhomes, and you can also email me at jbleierhomes@gmail.com.
How do you spell that? Oh, it's on the screen here, but
yeah, JBLEIER.
Okay. Okay, great. My name is Kenn Renner, real estate broker here in Central Texas, Austin region. My number is 512-423-5626. And my email address is Kenn, Kenn, @buyaustin.com. So we'd love to talk with you, or if I have people coming to the Danville area, I actually have cousins that live in Walnut Creek. So I'm familiar with it. Yeah, but we have people relocating there. Yeah, I have a lot of people in the Bay Area, South Bay, and that I have more clients in California than I have in Texas. It's funny.
Is that right?
Yeah. So let me come out there and get an excuse to go watch a 49.
Love that, Ken. That'd be great. It'd be great to have you out here, and we'd love to put together a seminar with you, because we do have quite a bit of people that are looking for exactly your niche. So I'm excited to pursue that with you. Yeah.
Well, great. And thank you for introducing to your friends. That's the highest level of confidence that we can have as a referral from a satisfied customer. So I appreciate that.
My pleasure. Thank you. Appreciate it, Ken.
See you.
Thanks so much. Bye.